Okie dokie, this is Coach Mike. Gonna be going over a bit of a general watch list that's outside of the focus group for those that do other stuff or maybe don't participate in the focus group at all. I'm also going to accompany this video by sending you it's just going to be a basic Word document with some notes so that it kind of makes it easy if you want to reference back the order that I go through in this video. I'm going to start out with Ford. I actually like what Ford's been doing. The recalls haven't hurt the auto manufacturing stocks. What I'm looking at is I do want to set up for more safety for some long-term stuff if we get continuation with the market bounce. What I'm looking at for Ford, if you want to take September monthly calls, you'd want to stick with the 17s. You get a lot better trading out of them. If you went with the October monthlies, you could take $17 or $18 calls. Your support / stop out area, $16.72. Even though I think I'm inclined to tell you might want to hold for one of these trend lines. And that's why I want you playing closer to what's in the money, or actually in the money right now. And a first target of 1846. Now, if you take the September calls at 1846, that's what you're looking for to get out of them. If you go with the October ones, that might be where you reduce some. And I'm not against you taking January calls either if you wanted to do that. We'll go over and take a look here at Goodyear Tires GT. I like this double bottom area. I also had a Fibonacci target pullback point of 2401. It got just below it Thursday, but the market's kind of dipped pretty bad. Based off of that low, though, 2389, I'm looking at potential for 2880. I do want to watch and see if it's just a dead cat bounce, though. It could be 2635. I like September or October monthlies, $25 or $26 calls. I think you could do okay in either of those. Next, we're going to go to TEN as the ticker. Tenneco. It's another automotive stock. And a couple weeks ago, I sent you some description on a few sectors of my watch list. And I actually said I didn't know if this stock would come back to this swing point. But if it did, you might want to take commons because the options don't trade well in it. It's a really strong fundamental stock that continues to improve. And, I think you're okay to play this with this trend line here as your stop out area. Next week that would put it at about 6150 or so. I would do common shares if you're interested in a common share play in the sector. That would be one that I would go after. Up next, Boeing BA. I am concerned that it made the lower low on Wednesday from this low. But I do think that if we see Lockheed Martin, Northrop Grumman, L3, Honeywell, UTX, all of those continuing upwards this week, that BA could give you a pretty good trade on the 920, 125 calls or the 1018, 125 or 130 calls. I've even considered maybe even going out to December, January on Boeing with some 135s or 140s. I haven't decided yet, but I'm really, fundamentally, Boeing actually keeps getting better, but there's just no interest in the stock right now. And we saw that last summer. Last summer, it really got into about September before Boeing really took off. And last summer, I was wondering, I was like, man, why is this thing just flat and not really trading well? And any up move it gets driven down harder. It's just odd. And then all of a sudden it took off and it didn't look back for quite a few months in a row. So I might actually play on that again. Now, stock I haven't talked about in a while that I love trading personally, BEAV. This is BE Aerospace. You see this trend line I put here just over the last year. Came down, hit it Thursday, positive move from it Friday. What's ironic here is they actually beat on their earnings. Their earnings, and they're growing. They're continually growing. I didn't like when they got into the oil and gas sector. Their aviation sector and the little parts and pieces they make has been doing well for the stock anyway. But with BEAV, I think I'm going to have to trust this trend line. And, if you, If you wanted September, I think you'd have to stick at $90 calls or less. If you want to go out to October, you might be able to get away with $95 or $100 calls. But if you wanted a good one to kind of trade at or close to the money, and trade out longer term, maybe even out to January, I think BEAV would be a good one. This is a stock that saw $101 and improved its fundamentals since then. That to me means if the market does continue here, if this is that bounce we only get every few months now, that pullback we only get every few months and the bounce from it, BEAV could be one, with at least $15 high side potential. So that I have a lot of interest in. It's going to be one of the more important ones I'm watching this week. Honeywell, HON. I did encourage some people in the chat room, just as big as it ran. Hey, if the week was kind of rough, a lot of consolidation last week. I said throughout the week that when you're at a top or a bottom, you get those times where it is kind of rough getting started. You have to have some conviction. Some of that conviction paid off. Some of it, with the focus group, them shorter term trades on Apple, they got the better of me. Luckily, had Goldman Sachs and Facebook to make up for it last week. But here with Honeywell, I do think that as hard as it ran on Friday, you could get a little bit of a pullback on it. And if you did, I'd still be looking at those $95 calls for September on Honeywell. They actually did fairly well on earnings, but the sector got beat up, and they got beat up too. My biggest thing I'd watch for, you see, even though this isn't a double top, you see how the M pattern is kind of there. I'd be watching around 93 to 93.30, maybe even as high as 94 if it did keep running, for it to then get a pullback, maybe even to around that $92 area at that point for where I would look to buy. Otherwise, watch for a 50% retracement from your bottom, and just watch for the next higher low setting up on your intraday charts. I'd probably use the 60-minute chart for that. That'd be the chart just to point you to kind of gauge you there. Let it make the up and down move. Make sure it's clearly making the next up move. It's okay not to buy a bottom. Let it confirm and establish that trend for that next up move. And as we begin that series, that process, the size of that trend will also determine how much buying and selling you can do, flipping an options position on the way up. Sticking still in this aviation manufacturing sector, Northrop Grumman, it made that same big up move. You see the gap fill here. It pretty much did it on Friday, and I'm looking to see if maybe it gets a pullback into that 122 or maybe even slightly below it, another 50% retracement, because I think it has potential up to $130. And with that, I would want to be watching this sector pretty closely this upcoming week, because this sector in general, Lockheed Martin, Northrop Grumman, L3 Communications, Honeywell, Raytheon, when they get moving, these can be some real big money makers, where they are making $10 moves, and that is phenomenal for options trades. Just for my buddy Bill Reese, I'm going to get into a couple biotechs. I don't like to alert biotechs because the danger in them, but there's sometimes I do like to trade them. I want to put them out so you can watch them. And for Bill Reese, I actually got one I've been studying. I know he's been watching SYN. He talked about it in the chat room. It made this breakout here. It has come back, retested that, and held pretty well on it. Positive momentum here with a stop at $1.59. Could easily get you back up into that 220 area, if not higher. And that's what I'd be watching. Really simple stop. You're talking about 5 cents off the current price for your stop out area. I want to go over to one of my favorites from last year that I traded, XOMA. It's really been holding that 355 base, 350 or so for quite a while. You see a year ago or so, it really came off of that 350 point as well for really big moves. I might personally start scaling into this. I wouldn't mind you either maybe taking, you could define your risk by taking the September $4 calls, or even January 2015 $4 or $5 calls in lieu of your common shares. stocks at this price, I don't like options trading just for the sake of options trading. I like to do the options in lieu of commons, especially on biotechs, because I define that risk, which definitely offers some protection against that dreaded gap down that can seemingly happen at any time on a biotech. Another biotech here is actually Halo. I haven't talked about this one for a while. I love the current trend on it. I think you could get away with some $10 calls for September. You could even go January monthlies, January 2015, $10 calls. And I think we might be in the process where Halo is working off that bottom. Easy trend line to go off of. You just want to trade it off the trend line's your stop. Every day that goes by, your stop gets higher. I'm going to go over to LifeLock, LOCK. It actually had great earnings, just the market sucked, so it didn't let it run. But we've got this trend line on it sitting about $13. That would be your stop. Pretty simple stop, because if the markets did get worse, it went below there. Well, it hits this line. If it goes lower, you got an M pattern, and it doesn't matter how strong the stock is. It would then go down. So you need to play with stop off of this trend line. I'm going to be looking this week for commons in LifeLock. Verizon, I don't talk about cell phone companies very often, but Verizon actually had fairly decent earnings. They gapped up, and then markets sucked, so they fell. We saw it with AT&T. T-Mobile fell pretty hard. Sprint fell, but they replaced their CEO. I took a kind of a risky gamble on Sprint for January calls that I'm holding out. Just going to hold them, see what it does. Anyway, Verizon, I actually like the potential here on Verizon for September or October monthlies for the $50 calls. That's just to right here. And the earnings had put it up to here before the markets got bad. So I wouldn't be surprised to see Verizon be able to make a nice bounce, maybe even get up into that high after earnings again. So I think the Verizon calls are pretty good. Vonage, VG, they had pretty decent earnings, but market sucked, so did the stock. It did hold that support level and that prior swing high that I've had marked on my chart for a while. I'm actually looking for Vonage. Not to take the commons, even though I have no problem taking the commons, but I like the December 20th, that's the December monthly $3 call. It's very well priced with plenty of time. Define your risk. Take the calls instead of your common share position. That secures less money. We can let it develop, we can let it do its thing, and we can see if we can get off this bottom, this 330 or so bottom, and start making those higher lows before we have to decide if we want to go with the commons or whatnot. CL, which is Colgate-Palmolive. Man, I had this bounce and had an alert set up ready for it, and I just missed it when it did it. But I think it has so much high side potential. I'm looking at maybe taking a third entry in something, looking at January actually, between $65 and $70 calls. I would only take a third of it because there is potential it could fall a couple bucks, back down here to this trend line. And that's where I'd take the other 2/3, but I want to get some just in case it keeps going. The earnings were actually phenomenal. It fell into the earnings, but then when they beat the earnings, it actually gives it the potential to actually get right back into the trend that it was before. It fell because, people were anticipating it might do poorly, and it shocked them. It said, hey, you didn't have to fall out of that trend at all, and therefore, we could see this up at, 71, 72 or higher, and I would allow it to be a longer term trade to do that. 3M, MMM, they make your post-it notes. Bounced right off the trend line I've had on my weekly chart. We used Fibonacci extensions before on the last trend line bounce to establish this 147.39 target. It got pretty close, less than $1 away. If it were to replicate that, probably going to get up to that 161.25 area. Where I messed up in February is I thought it would hit it by April, and ran out of time. Well, it needed 6 months, 5-6 months. So with 3M, if you're interested in that calls play, January 18th, I would take the January monthly for 2015, 150 to 160 calls. You could play anywhere in that price range for that target. The trend line's your stop. Make it simple. Falls below that trend line, goodbye, you're out of it. Now, on our focus group list, we have Visa. But I like this chart better, AXP. Let me tell you why I like it better. I think it was Ken, one of our members in the chat room, played some puts on AXP and it fell, and I said, I'm watching this Fibonacci area right here. Even though this chart isn't always the most accurate with Fibonacci's, but it was the only thing I had on my chart left. I had a bunch of drawings on here, and it was the only thing left that it could have fell to before it got really ugly, and it fell right to it. So, using that 85.75 low it had as a stop, AXP, I might be looking at taking some October monthly 90 to 95 calls. Remember, when you get these pullbacks that only happen every few months, you don't just want to short-term trade stuff, because then what you do is you get a couple good weeks of trading, you sell that stuff, and then it's like, okay, we're in consolidation. Then it's like you win one, you lose one, you win one. You've got to develop some longer-term strategies to sustain you, so that even when you are on the shorter term ones doing a win one, lose one, win one, lose one, or maybe win two, lose one, and not feeling too confident about it, you might be doing that on your short-term ones where all of those long-term ones are winning. And it makes it so much better. So don't just worry about short-term trading right now. That would be foolish. Citigroup, another financial stock. We saw Goldman Sachs do so well on Friday. Citigroup held this consolidation around 47.50, 47.65, made a nice bounce off of it Friday. I'd be looking for a first target around 51.69. And I think you would be okay playing the September 20th $50 calls for Citigroup. I would like those. And this is one that I actually would do shorter, unless you want to take a long-term thing. Then go out to January and still play the $50 calls. It's just not my favorite of the major banks. JP Morgan, you see the higher lows since it had the one earnings miss. And the bounce up off of it, I think this can get there right about $60. And I like the September 20th 57.50 calls or the October 18th $60 calls for it to make that move. I love trading JP Morgan, so if it doesn't gap up way too far for me to catch tomorrow morning, you may see me getting in JP Morgan. MasterCard, I talked about American Express on this video, and the focus group video talked about Visa. MasterCard, their earnings weren't bad. The market's tanked on them. I still think it gets up into the mid-$80 price range. I think you're okay to trade the 920 or 1018 $80 calls for that move. I'm going to go to another bank now, and this would be a very risky play. I want to say that first. This is a stock that if you've been around me for the last year or maybe 2 years in other venues, you've never heard me say anything positive about this stock. National Bank of Greece. It's another financial stock. But ironically, in all that time where I never said anything positive, the weekly chart, since they did that sellout deal and it really fell apart last year, the weekly chart hadn't definitively made higher lows yet. And actually what you see, if you look at the weekly chart, is you finally got to that definitive higher low. And what I'd be looking for here, this would be something that's, for me, would be a very small trade, by the way. It would be a riskier trade. But the January 18th, 2015, $3 calls. They're right at the money right now. It's at $3.06, $3, barely in the money. But that's one of those ones that I kind of got to say you only want to trade with what you're willing to lose. And let me tell you why. It's because it's a piece of crap stock. It hasn't done anything to benefit shareholders or anything. It has been junk, but you know what? It's actually starting to look like Greece itself may be doing a little bit better. That last big fall they had was for that bond offering they did when the EU allowed them to do the bond offering. And I think that if NBG was ever going to have any upside potential again, it would have to be off of these levels, or this one will sink into nothing. Next, GMCR. Green Mountain Coffee missed on their earnings. Coming up here on the lows of this prior consolidation before that last up move. I think if you get a fall below these points, or I'd say a close below those points, you might want to wait for that gap fill. But you may have a lower side target, 94.16, so almost a $10 move to the downside. But you do have this line right here on my chart as support, and that's what you kind of got to understand. I don't like this stock. I mean, I shorted it back here all the way down to there, got out of it just in time before it popped. But GMCR, I've always thought this one was a better short than a long. What I mean by that is, sometimes the Teslas of the world and the Apples and the Facebooks, people like to ride those long and, get some. This is a pretty low volume stock. And typically the best volume it has is when it falls. It creeps up on lower volume most times. Sometimes you get those spikes. But it's one that's very easy to determine if it's going to pull back. It was very clear right over in here. It was definitely going to pull back to this line. I don't typically make alerts on this one, so I haven't followed it much. But now it's getting to one of those chances where if it falls through here, the probability of getting to at least $95 is so high that I wanted you to be aware of it in case you wanted to trade it. Let's go over here to Netflix. Now, Netflix, this is one I'm only going to mention if the markets are weak. If the markets continue upwards, just ignore this one. That's why it's at the end of the video. But with Netflix, if we were to continue down, we still have a W that has not been tested. After making a head and shoulders pattern here on our daily chart, I still think that W will get retested. There's no guarantee that it will, but if the markets help you out and the markets become weak, Netflix might be the first one you want to go after for some October $380 to $400 puts. Might even be able to get away with the September monthlies, but that would put you in the money by about $8 to $10 on the 380s at the retest of that W, and I still think it's very likely that it fills the W, the retracement to the center of the W. Texas Instruments, I like this little stock, TXN. Continuing to grow and perform well on the earnings. I'm more concerned, I'm going to go to the weekly chart so you can see this a little better. This weekly chart, now the longer term weekly, you can say, well, hey, this is kind of coming off the high of that channel. Yep. But you know what? 1, 2, 3, now 4 bounces right off that bottom line. So long as it holds that bottom line, which by the way will get higher every single day, it will go up in value every day. If the market bounces, you got to play off support. The worst thing that can happen is you stop out if it fails the line. But this is one that's continued to do well off of these points each and every time. And I'm actually looking at the potential at January monthlies, $46 to $50 calls. I haven't decided which strike I'll take, but the January monthly I would gladly even take up to the $50 call. Probably end up settling something in like the 47, 48 range so that it goes in the money soon, and then I can ride it out. Just a little better feeling for me. But TXN, I like this one. If the market continues on the bounce, TXN's a good one for you to get in. CY, I'm mad at myself. I bought it darn near the bottom, and I sold. I made a gain on it, but I sold, and it's still doing very, very well. It broke out of this downtrend that I had, and it's held up there around that $10 range. I don't mind paying $10.20, $10.25 for it. And I think I might take a common share position. It is optionable, so it's you don't have to really worry about, if it sinks, what am I going to do? Well, you're going to buy in the money puts and hold them and see where it bounces and determine if you still want the shares or if you want to take profit on the puts and get more shares with it. So CY, I think, setting up fairly well for that. It actually looks a lot like Broadcom's chart before Broadcom really started moving. So I like that. Qualcomm, QCOM, big fall. Their earnings were actually good for EPS numbers, bad for guidance. I think it could give you a dead cat bounce. I think you got a good $3 to $5 move to the top side minimum. For that, you could play the September 75 call, 77.50s. But I read some things in Qualcomm's earnings report that was kind of one of those things where it was not a definitive downward move on the guidance. It was one of those, it almost was written as if it was protecting them, like, hey, well, what if? They've actually invested in some things that could have some big payoffs, and they could have some big payoffs come late September, even into the first week of October. And if you want to play a more of a speculative play to see if those do pay off, those October monthly $75 to $80 calls might be where you want to go. And I got one trade, I talked about this one not long ago, SINA. It's going to have earnings on the 14th after hours. It did finally start making higher lows. Got a nice trend line to go off of. I even told some people the other day I didn't mind them buying it. And even though I've got a little partial position started in options on Kihu, I'm going to be watching Cena's earnings after hours on the 14th. Because quite frankly, I might buy a common share position in Cena if they do well on the up move. So, quite a bit this week as a general watch list, some potential trades that I want you to look for. But, if we make this market bounce off bottom, you're going to want to watch these. You're going to want to watch aviation, manufacturing, and defense contractor stocks. You're going to want to watch financial stocks. You're going to want to watch some of those staple consumer discretionary stocks. And one I didn't put on there because the chart's really not set up very good, J&J, Johnson & Johnson, might give that potential. The tech stocks, they're always going to have their momentous times, but for good longer-term positions, financials, aviation, manufacturing, defense contracting, and consumer discretionary stocks, but those staple names like your Johnson & Johnson's, your Colgate-Palmolive, your Clorox are the ones that I'd be watching for. So I will get my little, it's just a Word document I'm going to send you. It's just some notes on the different trades I discussed in the video that I'm looking for, but you can correspond that with the video and see very easily where my support and resistance points are to help you with those trades if they were to get alerted or if I were to miss them and you wanted to take them yourself.